So I thought, first of all, a quick thought. I like music. You know Prince, 1999. So, party like 1999. So I think VC as an asset class is a bit like that. You partied in 2021, right? 2023 is a hangover. And 2026, everyone thinking, shall we party again? So with that context, okay, can I just ask you, short, sharp, and sweet, who you are, what you do, are you raising capital? Please. Here we go. Start from there. We have one more there. Oh, yeah, one there.
Can everybody hear me at the back? Yay, thank you. So my name's Sean. I work for a Canadian bank called CIBC. I won't tell you what that stands for. It's quite a long title. Doesn't really matter. I'm out of our venture and growth lending division. So all we do across North America and Europe is run hard after VC and growth equity-backed businesses to try and provide debt capital alongside the equity capital that goes in to help it grow more efficiently. Obviously, we're seeking a return, but also it's non-dilutive, so we're not seeking warrants or equity kickers. So that's the big strength of it. And notwithstanding the SaaS apocalypse and AI Armageddon, we're still fairly busy trying to get stuff done. So we have plenty of capital to put to work in Europe.
So you're allocating capital?
Yeah.
And are you allocating to GPs or to companies?
Companies.
Companies. Okay, that's helpful. Next.
Hi, everyone. My name is Zeynep Ozturk. I am a UK private bank team lead at JP Morgan. So why am I here?
Please, tell me.
I'm also asking the same question.
I think we all want to know.
So I look after, me and my team, we look after private wealth, mainly based out of UK, and VC or private investments is part of their asset allocation. So I'm slightly different than most of
So
the
you are
audience.
doling out cash?
Yes, we are finding investors to invest in your
into
products.
VCs.
Yeah.
So let's start on the premise that you believe VC as an asset class is working and you're looking to deploy capital into VC.
Correct.
Correct. Okay. Well, that's good.
Sorry, I believe that too.
You believe
I think
it's
it's working 100%.
Okay. Okay. So that's two believers so far. And I know you are a believer because you're going to tell us your story.
All right. Hi, I'm Baytok. I'm co-founder of idacapital. We are an emerging market-focused venture capital fund manager running a multi-fund strategy operating in different geographies like Turkey, Central Asia, covering with a new strategy, a new Pan-African, and also here in UK we are launching a new VC fund. So as part of your question, yes, we are the kind of service provider sitting at the other side of the table alongside with our investors.
Okay, so here, this is interesting, right? So you've got, I always feel with these conferences, you've got like three pools of people all chasing each other around the room. So you've got the, the GPs chasing the LPs sort of wanting to chase the GPs, but not really. They're kind of behind the back. The service provider chasing everybody, and then the startups chasing the GP. Is that fair enough? Is that a fair comment?
Yes, it's a typical food chain, I
Okay,
can
that
say.
is the food chain.
But I think everybody's chasing everybody. That's why it's like a healthy market.
Okay.
So ultimately, we need good companies to fund. And so the founders, I would say, are probably the most important because they're creating the businesses. They're creating the wealth fundamentally, I would say.
Okay, and how many founders in the room again? All right, okay, so you guys are important, so we'll come back to you in a minute. Listen, let's talk a little bit about this whole idea that VC as an asset class is broken today. And I think what I want to touch on in your views, and again, let's keep it short, is if you don't think it's broken, I think we all agree it's not broken. Why do you think it's not broken, and what is exciting for it for you as an asset class?
You want me?
Yes, or you go first.
Okay,
Yeah.
sorry, because you were looking to me.
Sometimes my eyes do funny
Oh,
things.
okay, sorry. So it's in every other asset class. You can actually apply the same logic to equity markets, to rates, to credit. You just need to be careful with what are you investing in, when, and how. So within the private wealth I don't think VC is at the top of the selection.
Where does it go? How far?
It
I'm going to put
is-
it 1 to 10. Where does it sit?
So maybe rather than ranking it, I would
Oh, come
just
on.
explain it in such a way that VC is only suitable for certain type of
Okay,
clients.
okay, fair enough. That's a good answer.
However, we have a lot of investors who invest directly into co-invest together with a VC to companies. So I'm working in an American bank. Of course, we have quite a strong US bias, but there are a lot of companies within Europe and especially in UK that some of these VCs pull in, and we see some of our clients being very interested in co-invest into those together with the VCs.
Okay, well, we'll come back to that in a minute, but I wanted to move the conversation along slightly. So I think we're all agreeing, for the right person, VC as an asset class is a good thing, okay? Now, let's talk about return expectations in terms of what a good thing is. And let's link it with your pitch as a GP, right? So you go into a room, let's say, Jem comes in to see you, and what's his pitch? Is his pitch about, hey, I've got a $300 billion fund, and my DPI was X. What would you want to see him to convince you to give him cash?
I need a very strong VC to, first of all, weight him as a smaller startup.
Okay.
So again, our scale and maybe investment style is a bit different than traditional investor. We need to connect and party along with quite a sizable VC and or a private equity-backed structure.
Okay.
Then.
Okay, so I think
yeah.
what he's saying is that you want someone large with a large AUM who's got a huge track record. So immediately that excludes like 90% of the market, 80%, let's say.
Direct access to us, but they reach to us indirectly in a way, so or our clients. What do I mean by that is we invest in a venture capital growth fund that JP Morgan sponsors. There are multiple very sizable managers within, and they 30% invest into startup.
Okay. Let's come back to that in a minute. So, Sean, right? So, Sean, you said you were still excited about VC as a class, presumably because it's giving you the returns that you've promised your bosses that you'll get by investing in VC.
Yes. So just to go to the title, is VC is a very specific type of asset class, meaning earlier stage, higher risk. So go in with your eyes wide open, but there's tons of businesses in there that are continuing to shape and disrupt other industries. It's very diverse. It's diverse by sector, by region, by stage. So there are lots of sort of micro asset classes that you can run at in there, and it's for everyone to make their own decisions as to what you want to invest in. But the choice in there is huge. Far higher, I think, that you would get in public markets, but the risk is a lot higher. So whoever you are, you have to do your homework, of course, but I still remain very energized about the market opportunity there.
Okay.
But both Europe, North America, and emerging markets too.
And do you see, just picking up at that point, are you looking for GPs? Well, no, you're not looking for GPs. Would you be more interested in someone who has a wider geographic coverage, or you don't care?
So the GP is very important to us as well, because they make the selection over where to invest, and then we decide whether we can support that type of investment profile or not. So the GP is hugely important for us, and we're expanding our range of coverage. There's different service providers for different sizes of GP or different sizes of company, but there's plenty of sort of lender capital, if you like, or mezzanine capital that's there to support GPs and their portfolio companies and the founders ultimately.
Okay. So let's switch a little bit to something else which you hear a lot about, which is in this space of venture capital, it's innovation, right? So everyone talks about most innovative company, etc. From maybe I'll start with you. From your perspective, what is the innovation you're seeing in the asset class that's changing the direction of how you are positioning yourself and how LPs are looking to allocate?
It's a critical question which determines our core strategy as well, because innovation and technology brings opportunities to invest. So new companies, new verticals arises. Nowadays we are experiencing AI, and we are hearing and witnessing multi-billions of dollars of investments happening, and company valuations are reaching near $1 trillion. That means there's a substance. So I can say that every 5 or 6 years, a new technology or innovation-based opportunity arises in the world, and investors would like to be part of that growth journey, and we see technically delivers that the gateway to the investors to be part of that. The question is, should you only be looking for that specific growth opportunity in that specific time window, like AI? Or are there other opportunities that still can provide similar growth prospects other than AI at the same time? VC also can bring new gateways for those opportunities as well. On our case, AI is the big players game.
Yeah.
That's why, as a relatively small fund, I mean, our AUM is approaching about $100 million. It's a small, actually. Other untouched areas and contrarian approaches still can bring alpha. For example, we are focusing to fintech, and in that fintech space, we are focusing to embedded finance, which uses still AI, but brings still very high returns. So as we see, our job is to find those kind of untouched, anti-fragile, defensive, high growth segments and sectors and opportunities.
Okay, so let's stick on that point, because I think that point, I mean, applies across the board, right? So first of all, VC as an asset class sometimes gets very confusing, because a $1 million micro fund is a VC, and a $1 billion Sequoia fund is also a VC. Yeah. So we need to segmentize where you are, and you're playing in $100 million, right? Now, then I think if you segment it the other way around, you say, well, are you an EM VC? Are you a developed market? Are you a US VC? And then some AI VC, et cetera, et cetera. I want to just touch, because, well, I'm an emerging markets guy. You know, I grew up in Malaysia, spent time in Africa. Where does EM sit in today's VC landscape? And maybe I'll start with you, because I know what your answer is going to be. Let me start with you.
Yeah, I'll go first, but I don't know what your answer is going to be. So I think North America and Western Europe have a much more developed VC set of support mechanisms, legal infrastructure, all that kind of thing. So there's a lot of support for the venture capital industry in those geographies. In emerging markets, and please tell me I'm totally wrong, is I don't know if it's there so much. So a number of our competitors, we don't play so much there, but that's not to say there aren't fantastic companies and founders there. It's just we're less familiar with it.
And I think, isn't that the problem, that most LPs just don't understand emerging markets? So what do you do to fix that problem? Because like everything in life, it's about information asymmetry, right? So you know what you know, but you don't know what you don't know. How do we fix that?
I think that might be the subject of the next panel. I mean, it takes years and years to build these things, and the legal infrastructure and all of the other providers need to go there. If you look at Europe, the development of the economies has been moving eastward. So, now Poland is one of the fastest economies, I think, that we have in Europe. So I'm surprised it doesn't happen faster, but I'm a bit out of my depth. Do you want to have a swing?
I mean, the name implies the answer, actually, emerging markets.
Maybe I should say developing markets.
Yeah, developing markets, yes. I mean, the answer is in the name, so developing. So when there's a development, then there's growth. When there's a growth, if you find the right vertical, there's a super growth as well. And if you look at the returns, those super growths are in line with the super deep tech, new technology returns as well. That's the kind of definition of emerging markets venture capital. It doesn't need to be super deep tech, but it is still innovative, still uses digital technologies, but benefits from the developing markets' new untouched virgin opportunities. So slightly different in that sense. Okay. Maybe a different vertical, but still returns are VC.
I'm going to pause for a minute because there was one question I was going to ask you right at the beginning. I forgot. But I told Jem, right?
Jem.
I told Jem the question, and I now feel unfair because I didn't tell you too the question. So the question I said I'm going to ask you at the end is, I'm a big music fan. I've invested in some music tech companies. And what is the piece of music that gives you the best rush in terms of the future? Everything's going to be good in the future. So you got a few minutes to think about that, and I think that'll be a nice way to end. But so that's just a plot in your head. So you got a bit of time. So I don't want to put you on the spot. So let's come back to the matter at hand. Okay. So let's talk about what's the current state of your view of the current state of allocators to VCs, and what are they looking for today? Now let's start with you because you're in that space. You're an allocator.
So I'm just going to mostly talk about not specific to my own firm, but in general how we see it from the investor space. It is extremely popular topic for private wealth because everybody wants to take an exposure that is not 100% correlated to the public market. And no one wants to miss out the next SpaceX or Revolut or those type of big opportunities. Therefore, there's this bit of an interesting psychology. My friend, my colleague or ex also invested on this and that company. I want to do the same. They made 5 times, 10 times return. I want to be part of that bandwagon. There's one attitude like that, and the other attitude is more around we want to allocate a certain percentage. Majority of our exposure is in these currencies, certain sectors, so very methodical asset allocation. So we see all spectrum, and not necessarily the most methodical achieves the best results, because occasionally this is more like you hit 10 opportunities within VC selection, maybe 5, maybe even less may work out well, but it can cover quite a significant income and performance. So overall, there is a focus on investing private capital. And then within that private capital, does it need to be direct investment, co-investment, through a VC, private equity, or private credit? So private capital also has a lot of selection. So VC needs to find a space even within that allocation. So let's say if allocation to private capital is going to be not more than 40%, VC might be only 5 to 10% of that 40.
Okay. We've got like 5 minutes, but I wanted this one topic which I think is really important to this asset class, which I'm going to put you on the spot and ask you the question first, which is NAV financing. So, yeah. So can you just tell us your view on that and how does it affect the market and how do you see that sort of growing? First of all, everyone knows what NAV financing here is? If you don't know, put your hand up. Or if you do know, put your hand up. Nobody knows anything. He's going to explain.
I'm going to explain it.
Yeah.
Okay, so pens and papers out, people. So you either lend to companies, or you can lend to the fund, or you can lend to the fund on looking down at a portfolio risk of the companies that are down there. So you would lend across the whole portfolio, but it kind of implies you know what's going on at each of those companies that are in that portfolio. In my opinion, there is a market there, but it's higher risk. So as an institution, we do it, but on a very selective basis. My team doesn't do NAV. It is a market there. It's probably an underserved market, I would say. It is an
underserved market, yeah.
And there's definitely some good returns to be made there. We have so far stayed away from it, but it's In some ways, it's like the whole of VC. It's different. You need better information to know what you're doing, but you can achieve superior returns there if you get it right.
So if you saw, let me ask you the question, and let me ask you the flip side to it. If you saw a fund that had done some NAV financing, is that a vote of confidence, or is that, oh my God, these guys don't know what they're doing, so they've had to use their balance sheet to raise finance?
No, we are in that space. We do NAV finance,
Okay.
but scales again are quite different.
Okay.
That's why when you're playing at a couple $1 billion structure,
Okay.
we are comfortable with funds using their own capital.
Okay.
And balance
So I
sheet.
think, how much time have we got, Ruben? Have we got time? 5 minutes to do questions now? Shall we do questions? Who's going to start with a question? If not, we'll carry on and we'll do the song in a minute as well. Any questions? No questions. None whatsoever. Okay, we'll keep going in. So let's just do, let me get a couple more. So we've done, so let's just talk a little bit about your fundraising journey, right? Over to you. And I want you to just focus a little bit on, first of all, tell us how, look, we all know, and everybody in this room, and if someone is telling you fundraising is not difficult, they're lying. So that's number one. If someone's telling you they fundraise really quickly, they're also lying. That's number two. But tell us the real story from your experience of fundraising, where you've been successful, where you've not been successful.
First of all, we raised our first fund in Turkey, which was one of the perhaps hardest places on earth to run a venture capital or private equity fund with the highest inflation maybe for the last 10 years. So the journey is long, as you would imagine, and my business partner smiles there. So, I mean, we've been through many things. So in a developed market, if you are well connected, if you have a very well CV, if you are a successful founder, or if you have worked in a successful venture capital fund, and if you're a spin out, then raising a fund is relatively easy, not a day, but within a year you can make it. But in our case, there are geopolitical risks, there are market risks, there are liquidity problems, there are lack of fund of funds or venture capital investors. So we've struggled with all of these. And actually, frankly speaking, it took somewhere around 6 years to raise the first fund. It took about 1.5 years to raise the second, because the first was so small, so we deployed the capital and created the required track record and KPIs. Then the rest came. So they say in our industry, raising the first fund is hard. Raising the second fund is harder because you have real track record in this case.
Good or bad?
But our real track record is very good, so we don't have a problem. But at the end, in parallel to this, we are a unique case because we became founders as well. We founded a company, a fintech company. It went very well. So eventually we won't need, I guess, any LPs, and we will be running our own fund. The time will show it. So basically, it was a long answer, but it can take many years. It requires perseverance. If you want to be an independent fund manager, you have to be struggling with many problems. But once you do it, your primary concern and focus should be the performance. Because as long as you have performance, the rest comes. Because everyone looks at what you have done.
Great. Listen, I think we're running out of time, and I'm going to give the audience a second chance. You got one more chance to ask a question. And I'm disappointed. Oh my God, well done, man. What's your name? Tell us who you are. Stand up, stand up, stand up. Give this guy a clap just because he put his hand up. Your question better be good now. Okay. Question is, what do you think is going to happen in the VC world? I want one-line answers. What do you think is going to happen to VC in the next 5 years?
I think it will slow down for the next sort of, it's already slowing down, I think. But then I think it'll accelerate again, because I think the world needs it.
I think there will be lots of consolidation.
Consolidation, yeah, I agree.
And I believe there will be a super big crash on the big funds. On mid-size and smaller funds will continue to return or bring good returns.
So I spoke to a VC friend of mine in Singapore this morning. I said, his name is Deepak. I said, Deepak, give me something smart to say. He said, just say VC, why bother? And the answer is, you should bother. Yes? Okay, now, to close off, the song that gives you a good high and tells you everything's going to be good in the future.
I was prepared for that. It's a Turkish song. I mean, the translation is going south, not in Turkey, not in English, meaning it's not a bad thing, it's a good thing. Because in Turkey, you drive south to reach the Mediterranean Sea, see sand and sun, and you see the sun just on your left from the west. So it is joyful, it brings energy, so...
so you got to tell us the song, we'll send the song out later, but
yeah,
that's the song you got to listen
I can
to.
share from Spotify, you will like it.
Okay. And you?
Fly Me to the Moon.
Fly Me to the Moon by Frank Sinatra.
Exactly.
And why?
I love that song. And moon is the target.
Sun, moon, okay. Now you got Pluto, no?
No, I don't know the Turkish song. They send me the link, but Fly Me to the Moon's great, and I would have Master Plan by Oasis, because it makes you feel you're part of something bigger.
Okay, Master Plan by Oasis. So mine is a one-hit wonder by a band called Timbuk3, not Timbuktu, and it's called The Future's So Bright, You Gotta Wear Shades. So with that, thank you very much to my panelists.